And traders were back. D7 here with freetradingvideos.com. And did Dell ever send the markets for a loop? I don't think it's all Dell's fault. I think it's the economy and the fear of what's happening with the hurricane that's moving north towards our shores, and just a lot of things. And let's talk about the S&P. Technically speaking, we smacked our head at the 1300, and there wasn't a lot of conviction behind that yesterday. That's why, you know, the longs that I had going through, some of my longs coming through, I pulled off right at the end of the day. And anyway, we expected a drop today, and sure enough, we got it, and probably more of a drop than what many of us were expecting, but we got it nonetheless. We had this S&P. We had this nice run up. Then we start to pinch, break down just a little bit, and then we pop through resistance right there yesterday. And then we're dropping back down. What's interesting here is we drop down below this support line. This support line should have been support. It broke through the resistance line, should have acted as support. We broke through it. Now this old support line right here, coming up, it's resting right on it. Resting right on it. And I could see as if we break down here, 1265 is our first area to break, then 1260 is our next. And after that, I mean, it could get ugly. And it'd be interesting to see how that plays out. Let's look at the Dow while we're here. The Dow, we have a symmetrical triangle. Symmetrical, we popped yesterday, not on any significant volume, and then we immediately retrace for 500 extra bonus points. What type of reversal pattern is this right here? Tweezers. It's a tweezer reversal pattern formation. Furthermore, it's a bearish harami. Tweezers. That's when you have the highs identical next to each other after an extended run to the upside or an extended run to the downside. Here we had a run to the downside. See this? Tweezers. You don't see them very often. But when you see them, they can be very powerful. Boom. Big pop, and it went right into an uptrend. Here, it would not surprise me if we break through this support area, breaking down through this. And if we do get down here, you know, in this area, down below this support line, you know, it could get really bloody out there. While we're here, let's take a look at the NASDAQ. The NASDAQ symmetrical triangle, we're below the 20-day moving average. See this blue line? And we're resting right at major support. Look at the MACD. The MACD is below the zero line. So a little ominous, if I say so myself. And while we're here, might as well take a look at the Russells. We have another symmetrical triangle. We're at resistance with plenty of downside. We have 20-day moving average that could act as some support. But anyway, when it's all said and done, I think that we have more downside potential than upside. There's nothing in the market saying that we should be heading up. So anyway, make sure you have plenty of hedges taking place, and that you're in bear inverse ETFs, or you're shorting the market, selling short, or you have put options going. So anyway, there you have it, gang. Happy trading to everybody. Have a wonderful extended weekend. I know that I will. And take care until next time. We'll see you at freetradingvideos.com.